All right, good afternoon. Welcome back here to Trader Minute. Great to have you aboard. A common theme playing out here in the market today where, we have a move in futures overnight, and then the market opens and makes a move in the first hour, right? Makes a move in the first hour and then just dies. And that has been a very common theme here in the markets over the last couple months, and it's typically a theme that we see when the market is more focused on what's happening globally than what's happening domestically here in the U.S. And that's what we see kind of taking place here today. We saw the market punch into a new high. It's pulled back 4 or 5 points from that. Nothing too major there. But, just this kind of open, early move and then die has just simply become a very common theme. And when it's been broken because of some sort of news event. And outside of that, the movement has been in S&P futures overnight due to global markets and global markets moving. Now, that doesn't mean it's the case for all stocks, right? We are seeing stocks, they go at their own paces. But, here's something like Apple, just kind of doing what the market's doing here today. Facebook, similar. Early on, early bounce, and then after that, just not a heck of a whole lot. Netflix, same thing. Bank of America, similar thing here. So, that theme continues. That theme continues to be heavy. And what do we know? What does that theme mean? Well, that theme simply means gap risk on a gap down, meaning market gaps down, the chance of further selling is pretty high, but only in that situation, right? It's not like we can look and go, well, because the market's doing this, it means that tomorrow it's going to do this, that, or the other. Now, I do believe that if we see again, big if, because it's not there and there's not even anything close to suggest it yet, but if we were to see the market sell off 20 to 25 points into the close today, buy puts on whatever you want and go. That's kind of, for those of you who are itching to buy puts, that's what you're looking for. I'm not saying that's going to happen. I'm not saying there's any sign that is happening. But, that's what you would want to see, and that is something that would prompt a lot of money out of the markets in the coming days. Now, challenge. We have one position on the board, and that's gold, GLD. And the stock's down 3 cents here. Option value is 172. And this is in that position where we've been in with far too many trades where, we're coming up on the red time stop. In fact, the red time stop is here this afternoon, and we're down $50 on the option. But our stock price is higher than where we entered it, right? And in this situation, if there's not another signal, if there's not something else for me to go get into, and we're not taking an extreme amount of risk, I have elected to hold, and I'm going to do the same thing with GLD here today. It's not putting the challenge at a monster risk. It's not, increasing the reward potential by a monster amount. It's a pretty nominal decision, but, I don't want to go into the close here with cash. Now, we do have another signal on the board, and that signal is Chipotle Mexican Grill, and it is a bullish signal here today. And the stock's up about $10. It's a really nice signal, but I can't trade it. We just are not in a period with the challenge where I can get into the options. If we look at the options here, the at-the-money strikes are going for, $18 to $21. I'd have to put $1,800 to $2,100 to get a single contract, and I can't do that. I don't have the cash to do that. I could come down, all the way out here to the 855s and get a contract. And yeah, if the stock goes, it'll pay off, sure, but that's just way too much risk to take for the position. I could come into a shorter period of time and go out of the money, but again, I just alter the risk profile by way too much in doing that. And so I'm not going to be able to trade Chipotle here this afternoon on the signal. So going to go into the close with the cash and GLD. Now, other stocks like Twilio that we talked about this morning, not signaling here. Consolidation risk component is still just too high here for it. It is something where, the option value does come into play a little bit with Twilio if it were to signal, but we could still make it work. We could still get into a position here and make that happen. It's not kind of in that Chipotle category there. Stocks like Honeywell with potential downside signals have not materialized here just yet. And so I'm for the challenge. I'm going into the close here with cash and with GL. With GLD. Okay. Now, as far as the market metrics here today, very little movement. Bullish percent index hasn't moved today. You go, well, the market's up pretty big. Why wouldn't the bullish percent index move, right? And I don't think you read anything into it if you're bullish, and you certainly can't read that much into it if you're bearish. It's just one where bullish percent index continues to be healthy, continues to be, strong for the bulls. Today, market's setting a new high. So what about the number of stocks hitting new highs versus new lows? Are we seeing any bearish divergence? Are we seeing bullish confirmation? We're seeing bullish confirmation. We're seeing this 530 number where, it's the highest of the year in terms of number of stocks hitting new highs. And that's very bullish confirmation. And if you're sitting there wondering, well, what do you do with this number? Right? What do you do with this number? Well, for me, this is a very easy number to know what to do with. It simply means that when the market finally does have a pullback, that pullback's going to be buyable. It's not going to be, this is not suggesting an all-time top coming in. This isn't suggesting that, hey, the market is never going to move back to these levels if it pulls back. In fact, it's suggesting that market will go significantly higher from these levels, right? Doesn't say anything about a pullback tomorrow or something of that nature, but it tells me what? It tells me, okay, if we get a pullback, and, by pullback, a normalized, 3 to 5% pullback over the course of 7 to 10 trading days, right? If we get a normalized pullback, that pullback is going to be very buyable, and we're likely going to see new highs come in after that, barring some massive new change in the rhetoric and everything that goes on. It's not a number that makes me feel comfortable to go out and get short, to say, hey, let me go sell some Bank of America or something of that nature. But it is a very healthy bullish number, and I think more bullish longer term than it says anything about the shorter term. If we look at the advancers decliners here today, we have 1,400 more advancers than decliners. This has kind of been the average number on the up days for the market. So nothing, too significant there. With that, if we look at some of the sector rotations and everything, we have the IWM up 0.8%. We have the SPY up 0.75%. So no real massive differentials there that would suggest that something is up or something is dramatically shifting one way or the other. So in terms of the market, right, it's similar to what we talked about this morning. If you start seeing lows break, the prior day's lows break, that's a danger sign, right? That is a danger sign. If we see the market gap down tomorrow, I suspect it will be a chaseable gap for the bears, right? That's my suspicion. But there's nothing here saying that the market's going to gap down tomorrow or that it has to gap down tomorrow. And in fact, it could easily gap up another 12, 18 points as we see momentum continue in the Chinese market. We see momentum continuing with the Brazilian market. If we come in and we just look at, Germany, the EWG, strong momentum there. So these global stocks have some very strong momentum So to say, well, we have to gap down, that's not, that's not something that I think we have any evidence of. But if we do gap down, I do think it will be a sizable, type downside side move there. And I think that that's where the risk is in this market, right? And so from an investor, what do you do with it? Well, you take some stuff and, maybe you buy a little protection. Let's just say you're running with some Rio, right? We've talked about this several times this year. Let's say you're running with some Rio. All right, you have a couple options. You can go and you could buy some put protection, right? In the case of Rio, you have a couple things going on, right? You have a dividend that you're collecting, so you don't really want to get too jumpy with it. I mean, it's a nice 5% dividend. That's a pretty juicy number, right? And so if you come in and you take a look at the options and you say, all right, can I buy some protection, right? If you want to buy some downside protection, it's not very expensive. Look at the implied volatilities over here. 27, 22, 23, 24, 25, right? You can get some pretty cheap protection. Now, if you go out to April, for instance, here, and you buy the puts for $3, you're kind of, you're not in a great position, right? You're giving up $3 here for a stock that, all right, moving $3 from this level would be nice, but chances aren't that high of that being the case, right? So, you look at it and you say, well, I'm just giving up too much. All right, if I go shorter term, can I buy some protection? 59.39, I can buy 40 cents worth of protection for $1.20, and this may be compelling, give you about 30 days worth of protection, and okay, great. I can see the argument there, but perhaps the easiest thing to do with a lot of these is pick a number. Pick the number where you say enough's enough, where you just say, you know what, my risk tolerance is gone. And instead of looking at the candle each and every day, trying to go, well, what does that mean? And what does that mean? And it did this, so what does that mean, right? Which is just going to be kind of a fruitless effort because, we can go back and find these candles and we can look at big gaps down afterwards and we can look at big run-ups afterwards, right? In fact, for instance, come back here to the end of March, nice run, big gap up, big black candle, all right? It's got to pull back, right? The stock's overbought. No, it keeps on going. And you say, well, then you come here to November and we get the exact same thing, and no, stock go down, right? So, it's not like we can look at this and say, well, the odds are huge one way or the other based on the candle. And so it's pick a number. Pick a number that you're comfortable with and that you're, willing to run with. Last week, and many of you know, I've had an IBM position several times this year. And I had another IBM position here last week. And on Friday, I cashed the rest of it out. I said, you know what? Enough's enough. It broke 135 on Thursday. I said, look, if it breaks 135, back below 135, I'm just not going to deal with it anymore. I'm going to take it and move on, right? And it just makes it a lot simpler, a lot easier. And so as you're looking at this and in this market environment, just pick a number you're comfortable with and run with it. Because there will be opportunity to get back into things. There will be opportunity. We're going to sit here sometime within the next 6 to 8 weeks, and the market's going to be in that position where people are going, "Ooh, wow, this is quite the dip. Do I buy this dip? Should I be courageous enough to buy this dip?" Right? Right now, it's like, "Oh man, do I chase the rip? Do I chase the rip?" Well, whenever it happens, there's going to come that period where it's going to be, ooh, do we buy this dip, right? It's going to feel very differently. And so be patient, be patient here with that. And, as far as your upside, exposures and things like that, it's not something to panic out of or anything like that. Pick a number and run with it, right? I know one of you is in Bank of America, right? Great trade, great stock, great everything. Bank of America, who's the biggest buyer? It's Bank of America. So, pick 34 and say, look, you know what? As long as it holds 34, I'm going to run with it. Yes, it's an arbitrary number, But now you can go sleep at night. Now you know exactly what to do. You know that, $4 of your gains are locked in, and it's an easier decision rather than looking at it today and going, well, stock gapped up, it's off its highs, so does that mean it's going to pull back? It's this far from the 7. The MACD's doing this. The volumes look right. All of that. You're just going to be able to tell yourself whatever story you want from the technicals, and so the best use here with these is pick a number and go. Right, maybe for Bank of America, 34.5, which is the low from Friday. You pick 34.5. Say, look, if that breaks, I'm gone. Now you've protected your gains. Now okay, your losses are, contained. Barring some sort of massive, major, bigger gap. But one of those where it also works. Look, if you want to buy. Right, you just say, look, I'm tired of sitting on the sidelines, or I want more in. Yeah, go buy Bank of America, right? Go buy it. 34.5, be gone, right? You can contain your risk here a little bit, just with some of the lows from the prior day without getting into all the technical stuff that, let's face it, for most of the stocks shows the same thing. Shows bullish momentum with overbought scenarios. And, that's just one of those kind of catch-22s for technical traders where it doesn't really tell them a whole lot. And that's where a lot of things, really sit in the short run right here. Thanks for hopping on. Have yourselves a fantastic evening, and we'll talk to you tomorrow. Take care.